Sand doesn't become stone in a day. It becomes stone because nobody was watching. $50 looks like sand. Loose, forgettable, easy to lose between your fingers before you even notice it's gone. And that's exactly the trap that keeps people retiring with nothing but the memory of money they meant to save instead of an actual retirement plan. You've probably done this math in your head before. $50 a month, that's nothing. That's a few groceries, half a tank of gas, a forgettable subscription you forgot to cancel. So you waited. You told yourself you'd start your retirement savings once the amount felt big enough to matter. And somewhere inside that waiting, years went missing without ever feeling like a decision. But there's a number too small to take seriously that quietly becomes the only number deciding whether you retire secure or retire afraid. And the way it works has almost nothing to do with how much money you have. It has to do with something happening underground in layers where nobody is watching. Here's the part most people are never told. The years you spend waiting for enough aren't neutral. They're not a pause button. Every month you postpone is a layer of pressure that never gets applied, and pressure once skipped can't be added back later at the same cost. The clock running underneath your bank account doesn't wait for you to feel ready. Deep under every mountain you've ever admired, there was once nothing but loose sediment, sand, mud, the dust of dead leaves and crushed shells, settling quietly at the bottom of some ancient sea. No single layer looked like anything. A geologist could hold one layer in their hand and feel nothing but soft sand crumbling between their fingers. But layer pressed onto layer, decade after decade, century after century, that same nothing much was compressed by the silent weight of time into limestone. Into bedrock, into the thing strong enough to hold up a mountain range. Money behaves under exactly the same law. $50 deposited once is sand. $50 deposited every month, pressed by years you don't even notice passing, becomes bedrock, the actual foundation of a retirement plan that doesn't depend on luck. Run the numbers honestly, the way a careful person should. $50 a month, invested at a long-term average return, is roughly $600 a year. After 10 years, you'll have deposited $6,000, and growth will have added a modest cushion on top, nothing dramatic yet. This is exactly where most people quit. The sediment still looks like sand. But keep going. By year 20, the layers you can't see are doing more work than the dollars you can see today. The deposits you made in your very first years, the ones that felt too small to matter, have been compressing the longest, which means they're now contributing more growth than the money you're adding right now. By year 30, something strange happens to the shape of the curve. It stops looking like a line and starts looking like a wall. Not because you suddenly got rich, because pressure applied long enough stops adding, it multiplies. This is the part almost nobody explains correctly. You've been taught that growth is gradual. It isn't. For most of this process, the curve looks almost flat, boring, slow, unconvincing. Then, late in the timeline, it bends upward so sharply it looks like a different law took over. It didn't. The law never changed. You were just standing too close to see it curve. The flat years weren't failure. They were compression you couldn't feel happening. Of course, something else is happening at the same time, and it isn't friendly. Inflation is quietly doing the opposite job, eroding the surface while your bedrock forms underneath. Prices creep upward 1% or 2% every year, so money sitting idle isn't standing still, it's eroding, like wind wearing down a hillside with nothing holding it together. That's the real danger here, not missing out on riches. Losing ground without noticing, the way a coastline disappears a few inches at a time until one day there's no beach left. The temptation every single year is to stop. To tell yourself $50 isn't doing anything, that you'll wait for a raise, a bonus, a better moment to start your retirement savings for real. But ask any geologist about skipped layers. They never get added back. There's no catching up on missing sediment. There's only starting the pressure later from a thinner foundation. And maybe right now you're doing that math and feeling behind. Maybe you're 40 or 50, and $50 a month sounds like it can't possibly matter this late. Here's where it gets uncomfortable for a second. Starting late does mean a smaller mountain. That's just honest. Nobody trying to protect you should tell you otherwise. But here's what almost nobody says about that smaller mountain. It's still a mountain. There are ordinary people living on completely ordinary incomes who quietly set aside small, steady amounts for most of their working lives. By the time they retired, that modest, unglamorous habit had compressed into a financial foundation worth far more than anyone around them ever guessed. Not from one brilliant decision. From decades of layers nobody else thought were worth depositing. They never felt rich while building it. Bedrock doesn't announce itself while it's forming. It only reveals itself once it's already holding weight. That's the part this video exists to put back in front of you. $50 a month, started today and never stopped, isn't a guess about getting rich quick. At realistic, historically grounded growth rates sustained across a full working lifetime, it is mathematically capable of becoming a serious six-figure foundation. And for those who start early or who let contributions grow alongside their income over the years, a seven-figure one. Not because the money is magic, because the pressure was real and it never took a year off. Once you actually understand this, $50 stops feeling small. It stops feeling like sand. You start to see it the way a geologist sees the first layer of sediment at the bottom of a sea that doesn't even know yet it's about to become a mountain range. The number never changed, your eyes did. There's one more layer to this almost nobody gets told. The exact point in this process where waiting one extra year costs you more than waiting 10 years ever did before it. That's not next month's video. That's the next 10 minutes of your life, the moment you decide whether today becomes one more grain of sand or the first layer of something built to hold weight for the rest of your life.